So what I'm going to talk to you about today is really sort of try and set the Netherlands in an international context about the money that's flowing into the market, and maybe some of those markets in Europe that have won versus those who have lost. And then delve down a little bit more into and look at who the investors are coming into the Dutch market over the last few years, but also bring it up to date to Q1. A little bit of background just so you know what we're talking about here. Real Capital Analytics is a business that tracks transaction activity across about 160 countries. It says 146 there, 160 countries around the world, and the database is about 18 trillion US dollars. So it's a very deep database to delve into and try and get an understanding of where money is moving to and from, and who are those players in the market. This is Europe. This is Europe up until the end of Q1, it's quarterly data and it's quarterly transaction volumes. And what you can see in Q1 2017, volumes were down 16% compared to the same Q1 or the same period last year. And we've seen, with the exception of a couple of the peaks there, in the last there, sort of those are the Q4s, we've seen a slow sort of gradual decline in activity in Europe over the last few years, as I say, with the exception of those sort of quite spiky Q4 periods where a lot of people like to get deals done. But the trend line is pointing downwards, and we've seen a slowing out activity. But not everywhere has lost. And these are the sort of chart where you can start to identify the winners and the losers. The big story from last year, in terms of 2016 and into Q1 this year, is that Germany has overtaken the UK as the #1 destination for investors wanting to do transactions. And it's not a small overtaking. It's almost 5 billion for the quarter, and a little bit over 10 billion for the full year. So Germany has really established itself as a destination for investors over the last 12 months or so. I've highlighted the Netherlands on there as well. You can see a little bit of a slowing in Q1 this year in terms of activity. Q2 is actually looking quite positive. We've seen quite a number of big deals. There's a couple of big portfolios as well that might sort of close over the next few weeks that will really boost the Dutch volumes, and that will sort of maybe take the Netherlands back up above Sweden in terms of activity. But over the last 12 months, the Dutch investment market has been up 11%. So that's a positive story in a European context. Some of the winners and losers, looking at sort of in a slightly different context, rather than just compare them to last year or Q1, let's look at them against their 11-year averages in terms of activity. These are sort of absolute volumes, they're not percentages. And you can see sort of the ones I've split out at the top of the chart are those where they're significantly, or at least they're above their 11-year average. So those are markets that are really sort of doing quite well at the moment. Germany, as you can see there with the orange bar versus the grey, very significantly above its 11-year average in terms of transaction activity. Towards the bottom, you've got the other end of the story, the Brexit story. We can talk about that a little bit more on the panel. But the Brexit story there is about the UK and the how so fewer people are now investing in the UK. The market in the last 12 months was down almost 50%. So a lot less activity in the UK market, and you can see it's significantly below its long-term average. And I'll leave that so that you can see there the other markets that are benefiting. But the Netherlands is there towards the top of the chart, sort of above its 11-year average. So it is sort of doing quite well compared to sort of its long-term activity. It's up 7% compared to that long-term activity. Just sort of a couple of notes. Amsterdam has been consistently in the top 10 of cities in Europe. There you can see just highlighted orange there. There are some challenges to it. Stockholm is challenging, has been challenging for a long time in terms of Amsterdam's top 10 position. You can see sort of they've swapped a little bit over the time. But there are some smaller markets like Prague, Leipzig, Birmingham, for example, who only need a couple of big deals, and they may be up into the billion euro transaction activity. And you can see that Amsterdam may be sort of losing a little bit of steam there. But the rest of the Netherlands is actually quite diverse, and lots of opportunity in other parts of the Netherlands, in some of the other cities, but also some of the smaller markets as well. So, but Amsterdam comfortably been in top 10 for quite a long time. A little bit of a focus on the Netherlands now for the next few minutes. These are quarterly transaction volumes. They're looking at different sectors. You see the office sector is often the key sector for the Netherlands, but also the apartment sector as well. So a mix there of both the institutional and social housing market. Looking at the year-on-year change, you can see we've had a good few years of quarter-on-quarter positive performance from the Dutch market. It's only the latest quarter where we're starting to see a little bit of a downturn in terms of the market, but you can see how 2016 was a consistently sort of strong performer, and Q2, as I said, does look like it might be positive in that sense. But really our topic here today is looking at international money. This is the Dutch transaction volumes broken down by headquarter of the investor, whether they're based in the Netherlands, the blue line, or whether they're based overseas, which is the orange line. And you can see since 2013, it's been the cross-border investors who have the lion's share of the Dutch investment market, and that's been consistently now running at around about 60%. So it's sort of really the Dutch market is seeing a lot of investment activity from international investors. How is that in context with other markets? How is that 60% in context? You can see there the Netherlands sits within that group of sort of markets where they're seeing more than 60% of money coming from overseas. The Dutch market is actually quite interestingly split between continental, so those are other investors in Europe, and global money, so money coming from outside Europe, a lot of that coming from Asia at the moment. But then you can see those markets below there where they're sort of more domestically orientated. UK, Germany, sort of Netherlands are sort of very much in the same sort of ballpark in terms of percentages, but you can see there how the Netherlands sits in context with the rest of Europe. The interesting change in the type of investor coming into the Netherlands from overseas has been a swap round from private equity to more core investors. That's where we've seen, you can see here percentage-wise, of that cross-border activity into the Netherlands, almost 40% of it for a number of years was private equity-style investors looking for those value-add opportunities. That fell down quite dramatically in 2015. Despite the fact that cross-border money was continuing to increase into the Netherlands, what it was replaced by was more core-orientated investors, or Asian investors looking at the higher, sort of lower yielding, higher price buildings, particularly in the CBD market. So maybe some of those private equity funds felt that the value-add end of the market had started to sort of get a little bit outpriced for sort of the return strategies they were running. And you can see how well above the European average it was, and now it's pretty much in line with the European average in terms of percentages of private equity money. But you can see here how that sort of strength of that cross-border money coming into the Netherlands has increased in terms of percentages. This is a percent of overall cross-border money in Europe. So the Netherlands has gone from only getting 2% of overall European cross-border money to upwards of 8%, and it's fallen down a little bit, but it's still sort of quite high up there and well above its long-term average in terms of its share of European money. So plenty of money coming from overseas into the Netherlands market, and the Netherlands getting quite a big share of the cross-border pie. Who are those foreign investors? The United States has led the way for a number of years. You can see there at the top. It's actually quite nice on the right-hand side there, or yep, your right-hand side, to actually see sort of this is one of the few occasions I actually put a chart up with investor names, and Blackstone isn't at the top. Blackstone is normally quite often at least at number one. This time it's at number two, but you can see some of those key investors there. If some of the rumours are to believe, some of that money we've got allocated to Amundi. I think I just read this morning in PropertyEU. Some of that money that we might have allocated to Amundi may be rumoured to be from Korea. That may sort of translate into boosting that Korean pot over on the left-hand side here. But certainly you can see sort of the money at the top. Interesting thing thinking about Brexit and the impact it's had on the UK. The UK seeing a significant decline in cross-border money, almost 50% down into the UK. The UK is now sort of increasing its activity overseas, and actually the Netherlands, Germany and France are benefiting from that. So UK-based investors are moving more money into mainland Europe, whereas before they were very domestically orientated. So maybe that's a sign of sort of some nervousness in the UK, but maybe just a sign that maybe not having all your eggs in one basket is a good thing. But you can see there some of the key investors. Again, Around Town actually translates directly across that Cyprus number, even though Around Town is actually largely a German-operated business, but actually listed in Cyprus, so it's or headquartered in Cyprus. But that maybe belongs on the German pile, really. Just think about pricing a little bit in the last few minutes. Looking at where Amsterdam is, you can see Amsterdam on the far right-hand side. These are office transaction yields, and these are the best of the best. These are sort of the high-end CBD, the shiny trophy buildings that are trading in the markets. We've got the German markets all trading in between Hong Kong and Singapore levels. Germany's seen a huge amount of interest from overseas money, but also domestically. So those very sort of very trophy buildings are trading at below 3%. So Amsterdam is actually trading a little bit above 4% and actually looking quite well priced in a global context. So maybe one of the reasons why a lot of that Asian money in particular is finding interest in the Netherlands, that compared to some of the other trophy building markets, that is actually well priced. But if you look down on the right-hand side, its spread from its long-term average is one of the highest changes in spread that we've seen. So it's moved in 190 basis points, a little bit sort of less than the German move, but certainly Amsterdam yields for these top-end buildings have moved in much further than some of the other markets. And looking at the spread between prime and average, so average being sort of the whole of the market, prime being those really CBD trophy buildings, you can see a significant change, and that coincided with those private equity money moving out of the market, or at least buying less, and the core Asian money coming into the market, pushing down those yields as competition improved for a very small set of buildings, but certainly pushing down those yields to those very low levels. But pricing is still recovering. So if you take into account the yield side, but also the rental side, there's still a lot of opportunity for movement upwards in pricing in Amsterdam if you believe in a rental recovery story. This line is actually from our repeat sale index, which looks at the same buildings trading over multiple time periods. So it's looking at the change in the pricing of those buildings on a stabilized basis. And what you can see is a gradual improvement in pricing. You can see when the private equity funds bought in, when they were getting bargains. You can see when they left, when the prices started to arrive and they could sell out and get better pricing. But certainly when some of that core money came in. So it's up about 20% from its trough in 2014. So prices have risen about 20%. But if you look at it in an overall context at a European-wide level, you can see that Amsterdam has still got a long way to run in its recovery, if it's going to recover even back to where it was in the peak of the last cycle. You can see it's a long way to run. But where London, German markets, Paris markets have recovered quite strongly over the early part of the cycle, they're starting to sort of, particularly London, starting to plateau, whereas Amsterdam is slowly moving up. So lots of opportunity for investors to still get recovery here in Amsterdam if they invest in the next 12 months or so. And I just wanted to touch on just leaving with a slide really from INREV, ANREV and PRIA's survey about investor intentions, and really just whatever the strategy, whatever the source of capital, there's still a lot of capital trying to get deployed to the markets. So while the pricing here in Amsterdam is still reasonably low on that overall price per asset basis, some of that money is targeting this market, and it is coming high in some of the allocation surveys. So Amsterdam should continue to see a lot of capital flow in.